I want to talk to you about how to get a personal loan for a tight budget. We're speaking about at least $12,000 in yearly income, okay? How do you get a massive amount the first time you apply? You need to use a formula. You need to use a code. And this formula, I'm teaching it to you in this show.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging in the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you already asked me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about personal loan for a tight budget. We are speaking about $12,000 in yearly income, at least. Okay, that's the minimum here. And we are speaking about gross income, okay? How do you get a massive amount the first time you apply? I'm talking about right off the bat when you apply. How do you actually do things properly so you get a massive amount? I'm going to talk about that today. And the first thing you need to do is you need to pay attention to your income. Very important. Income is really key, okay? So when we talk about $12,000, the lender wants to make sure that you indeed at least $12,000. The lenders wants to make sure that you are actually making the salary you say you were making. It's very important. So we're talking about pay verification, okay? You're talking about employment verification. What I'm trying to say is that make sure that the income you put on your application form is accurate, because the lender is going to verify that anyway. Because with the low budget, with the low income, the lender wants to make sure that you have the means to pay the loan back, okay? So they'll ask you to verify your income. They'll ask you to verify your employment. In other words, they'll ask you to tell your employer to send them an employment verification letter. It's important, okay? So how does the lender really verify your income? Very simple. I mean, you're talking about pay stubs, okay? They'll ask you for your pay stubs. They'll ask you for your W-2s. They'll ask you for your 1099s if applicable, okay? And in some cases, the lender wants to see your tax returns. So it's really important to actually be clear of that, okay? So you want to be clear on those elements, because we've seen that a lot of people lie on their loan application. It's sad though, and it's very dangerous, and it is illegal also, because if you listen to me, never do that. Never lie on a loan application. It's a felony. Okay, you don't want to end up in jail because you lied you committed lender fraud or bank fraud. You don't want to do that. Never do that. Okay. So common lies on the loan application. We've seen people have exaggerated income, not reporting debts, false employment, inaccurate residency, misrepresented purpose, undervaluing assets. You don't want that. Okay. And so there are risks of lying on a personal loan application. I've said this before. You might go to jail. Yeah. This is for real, okay? I'm not really playing here, so you really want to avoid that. You want to always tell the truth on a loan application, especially when it comes to your assets and your income. The second thing you need to do, if you want to actually get a massive amount for the first time you apply, if you have a low income, is to make sure that you want to make sure your credit history is at least 2 years old. Okay. The thing is, you have to understand the lender is looking at you as a high risk of default. In other words, you don't have the cash to actually pay them back. Okay. So you need to have a few things that go in your favor, right? And one important element is if you have a credit history that is at least 2 years old, you're telling the lender, hey, listen, this person has a little bit of experience in terms of credit history. And, in other words, he or she has borrowed and managed repaying the credit products back, whether it is credit card or loan or line of credit. So it's really important. So now we are talking about length of credit. Remember, I'm not talking about your FICO score itself. I'm talking about your credit history, your length of credit history. Okay, those are totally different. those are totally different things, because somebody might have a 10 years of credit history and have a FICO score of 500 versus someone who has, let's say, a credit history of 2 years old, but with a FICO score of 725. It's not about quantity always, it's about quality. Okay, it's about how you manage your credit. So length of credit history affects your credit score very, very key, in a very important way. First of all, you have to think about people, like when we talk about length of credit history, we are speaking about average account age, okay, total number of months since each account was open, divided by the number of accounts you have, the oldest accounts, the earliest date open, this is important, and the newest accounts, the most recent date open. So those are things that the lenders pay attention to make sure that they actually approve your massive amount. So what I'm trying to say, let's say for example, niece, nephew, I'm talking to you. Imagine you are making 24 grand a year, right? And you want to get a massive amount. Well, if you have a credit history that is at least 2 years, or let's say you have a credit history of 5 years, this is kind of cool because that's experience right there. Okay, you're telling the lender, hey, listen, I may not making a lot of cash, I may not be banking the way others are, but I have experience. And you know what? Experience matters all the time. So as long as you have a let's say an old credit history, that will be fine. But you want to back it up with a good FICO score though. Speaking of a FICO score, this is important. You want to raise your FICO score because, father, mother, I'm talking to you. If you're currently in a situation where you're making income that is as low as $12,000 a year, and again, we are speaking about gross income, you really want to gradually think about your FICO score. You know, I always say this all the time, and we have done this after 30 years of research here. Credit is a game. Credit is an important game. It's a super game, okay? It doesn't matter how you look, your name, your legality, where you live, you know, because people talk about, well, you know, they deny my ass because of how I look. Hey, stop that, all right? First of all, credit is a game. If you understand the rules of the game, if you understand how the game is played, you will always win, or you will always win 90% or 85% of the time. What I'm trying to say here is that I'm not oblivious of certain realities going in this country, because you live in this country, I live in this country, okay? But I'm not going to get into the realities here. But what I want to tell you here is that if your ass is denied by one bank, 9 other banks will approve you, because you know what? You understand the rules of the game. Learn the rules of the game. And part of learning the rules of the game is raising your FICO score, because I want you to raise your FICO score. So when we talk about raising your FICO score, you want to pay your bills when they're due, okay? I don't want to hear if and buts, whatever. No. Pay your bills when they're due. You want to keep credit card balances low. I'm talking about living within your means, okay? What's up with always going out on Saturday night? Cook at home, and I'm talking to you. Mom, I'm talking to you. Dad, I'm talking to you. Cook at home. Have a family dish. Okay, enjoy. You want to keep credit card balances low. Check for errors. Okay. You want to make a plan to pay down debt. Yeah. Are you currently struggling to pay debt? It's about time you budget. It's important. Keep using your credit responsibly, and don't open multiple credit cards in a short period of time. Right? What's up with that? What's up with just playing around? Don't close credit card account either. Okay. One thing I want to say is you want to shop for a loan within a focused period of time, because those credit inquiries that are just bombarding your credit score, your credit reports, are not good for you. And be selective by the number of credit accounts you open. Okay. They are important. And last but not the least, if needed, consult a credit counselor. I want to talk to you about number 4, direct deposit. Oh yeah. You know, you're probably going around and saying, you know what, I'm making at least $12,000 a year. I'm making $15,000. I'm making $18,000 a year. Okay, you want to set direct deposit. You have to understand direct deposit is powerful, very powerful. Okay, if you want to get a personal loan If you want to get a massive personal loan with at least $12,000, you want to have direct deposit. You can have direct deposit in a savings account, in a checking account. It doesn't matter. Okay. You can actually set it up with an account with a bank or a credit union. It's very important. So the reason why I'm saying this is that you're going to borrow from that bank or credit union, right? So they want to see that you're making money. They want to verify. See, when I just started this show, I talked to you about verification of the income, right? I talked to you about employment verification letter. Did you know? Because I want you to write it. I want you to write this down. Did you know that having direct deposit solves all your problems when it comes to verifying your income and employment? Yeah. Oh yeah. Yeah. If you have direct deposit, a bank or credit union, guess what? They actually see your income every 2 weeks or every week or every month. Okay. They know who is issuing the checks to you, the deposits to you, and they know the frequency. They also know the amount you were paid. So a direct deposit actually solves all those problems. You don't have to prove anything anymore. They see it every 2 weeks, because that's what I want you. That's what I was talking to you earlier. It's a game. You have to know the code. You have to know certain tricks. You have to know certain hacks. Okay. And direct deposit has a lot of benefits to you as an employee. It's very important. Okay. And you have to understand that when we talk about direct deposit, you get paid faster with direct deposit. Paper checks are inconvenient in some cases. And the thing is, you cannot lose direct deposit. In other words, you can lose it. You may lose a check, but you can never lose direct deposit. Okay. And most important of all, direct deposit is free. Think about it. And which is what's really cool is that you can actually split it in multiple accounts. I'm not saying you want to have 100% of your check in one account. You probably want to split it. Maybe 50% here, 50% there, or 40-60 or 30-70. It depends on you. Okay. And you can avoid monthly maintenance fees when you use direct deposit, and you can automatically divert payments to savings. Very important. I want to talk to you now about where to actually borrow. It's very important to have a clear idea of because there is a difference between banks and credit unions. So you have to really pay attention to what you want, right? You want to borrow, you want to have a massive personal loan. Okay, that's good. That's a good strategy, but you better know where you want to borrow that cash. Okay, and so the first thing is you need to ask yourself, do you want to have a credit union? Because with credit unions, you have some pros and cons. Okay, credit unions, they have less rigid eligibility requirements because they're not profit oriented. Okay, they have lower interest rates. Deposits are insured in the same way as banks, and you have greater financial literacy resources. In other words, they educate you, they help you out. Remember, a credit union is a nonprofit organization. Okay, now they do have some cons. So you have limited financial product offerings, and they have fewer physical branches. So as long as you're willing to put up with the drawbacks, you're good to go. Now, a bank is different from a credit union. Why? Because the bank has more products, right? What are the pros and cons of banks? Let's just talk about that. Well, you have resourceful online apps, right? We've seen they have tools, they have features. I mean, a bank is a for-profit financial institution, okay? So the main financial services a credit union offers, including loans, checking accounts, and savings accounts, are also available with traditional banks. What are the drawbacks of banks? You have stringent eligibility requirements, higher interest rates, and transactional fees. Now, what I want to tell you here is it depends on what you're looking for. Our preference, when you have a low income, when you have a low income, you want to try credit union. You want to try borrowing from a credit union because they are more, I think they're more flexible here. You can start with them, and then later on, as your income goes up, you can try a traditional bank. You can go with a big national bank. Okay, you can try first with a regional bank, and then you want to go with a big national bank. The whole strategy here is that you have to understand when we talk about credit unions, you have eligibility requirements that are flexible, interest rates that are lower, they have insurance coverage, and they have financial literacy resources. Okay, so you really want to have an institution where you are able to be educated. You're able to grow your financial knowledge if you have none, or you have little, right? It's all about being in the game. It's all about being in the game and learning and learning and learning. Keep learning, boss. Keep learning. I'll be right back right after this. Don't go anywhere.
Finest, yo, 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 Miss Tequila, and call me señorita. Ay, papi, got me dreaming. My legs up on the ceiling. Oh, yeah, yeah, yeah. I know when he come, he ain't never gonna leave. No. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. I'm still having a conversation with you about personal loan with at least $12,000 in gross income annually. Okay, how do you get a massive amount when you first apply? And so I want to talk to you now about co-application. So when I talk about co-application, I'm speaking about two scenarios here. You can co-borrow or co-sign the loan. Okay, now you have to understand there are differences between co-borrower and co-signer. Okay, you probably hear this. A lot of people just talk about stuff, whatever, and they never explain things to you. Hey, listen, I'm going to explain to you. So when you have a co-borrower means that you and your partner or your co-borrower, whoever that is, this could be your spouse, your friends, your relative, or whatnot. It depends on you. So when you have a co-borrowing relationship, both borrowers, you and your partner, have responsibility for the loan. In other words, you are receiving the benefits of the loan and you're paying the loan every month. Okay, so both of y'all have skin in the game. I want you to see it that way. Let's say you apply for 10 grand, okay, and you got approved for $10,000, and you're making payments of $300 every month. Well, you and your co-borrower have to figure out how to make that payment every month. So in other words, the lender will consider both of your income to grant the loan. That's for co-borrower. For co-signer, the things are totally different. So if you have a co-signer, you as a primary borrower has responsibility to pay the loan. However, if you default, the co-signer will step in. See, that's a slight difference here. Okay, there's a slight difference. And so if I were to explain this to you further, I would say that being a co-borrower bears more responsibilities than being a co-signer. However, those two are important also because for a co-signer, if the primary borrower defaults, his or her credit score will tank also. Okay, so how do you choose between being a co-borrower and co-signer? It really depends on you. It depends on the relationship you have with the person, with the primary borrower. It depends on the goal of the loan. It depends on a lot of things. Okay, because hey, with a co-signer, you won't have to put up collateral or accept responsibilities for regular payment. Also, if you make on-time payments as the primary borrower, you may boost your credit score. On the flip side, if you default, the co-signer will be on the hook for payments. Okay, as a co-borrower, you will benefit from the loan directly. So you may also qualify for lower rates and higher amounts, especially if you both have good credit. Okay, the downfall, however, is that if you have a shared responsibility for making payments. I've said this before. Additionally, you may need collateral and you will notice a dip in your credit score as a result of late payments. Very important. Let me talk to you now about the strategy. So it's important to actually have a strategy to actually qualify for a large personal loan with at least $12,000. I've said this before. I said you have to consider a credit union or a big national bank before, but hey, listen, there are lenders called online lenders. Fantastic category, and sometimes they have good rates. They have large loan amounts. Their rates might be a little high, but they have large loan amounts, and this is important because we are speaking about a massive loan amounts. Okay, so consider reputable low-income lenders. So there are some lenders with less stringent income requirements than others, right? Keep in mind that you will still likely need to meet other eligible, eligibility criteria to qualify, though, right? Such as having a good credit, for instance. But they are more flexible. So we are talking about Avant, for example. Avant is a great player. They can lend you from $2,000 to $35,000. Their APR oscillates from 9.95 to 35.99%, okay, APR. And you have Best Egg. Their APR goes from 4.89% to 35.99% APR, okay, and the loans goes from $2,000 to $50,000 for Avant, for example. Minimum income amount $24,000, and for Best Egg loan, the verifiable income must support ability to repay. So they're more open. You have Freedom Plus. Your APR goes from 7.99% to 29.99%. You can borrow from $10,000 all the way to $35,000. You have Lending Club, 704% to 35.89%. So your verifiable income must support ability to repay. And the loan amount here goes from $1,000 to $40,000. You have Lending Points. Okay, here you have 7.99%, 7.99% to 35.99%. Okay, APR. And the minimum income here is $20,000, and the loan itself goes from $2,000 to $36,500. Okay, you have Happy Money. You have the APR goes from 6.99 to 19.99%, and they want you to have at least $30,000, and the loan goes from $3,500 to $40,000. And you have Prosper. Okay, Prosper, the APR goes from 7.95% to 35.99%, and you want to show some form of income, and the loan itself goes from $2,000 to $40,000. Okay, you have Upstart. APR goes from 5.4% to 35.99%, and the loan goes from $1,000 to $50,000. So the bottom line here is that you have to have a great strategy to choose the right loan, right? Shop around and compare lenders. I want you to pick the loan option you like most, okay? Complete the application and get your funds. It's all about it, right? And if you don't qualify for a personal loan, okay, don't worry. You can improve your credit score. You can apply with a co-signer or co-borrower. I've said this before. And you can try local charities or programs. Yeah, the sky is the limit. Try everything you can. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about personal loan with at least $12,000. How do you get a massive loan amount the first time you apply? And I spoke to you about income, credit history, FICO score, direct deposit, bank or credit union, co-application, and strategy. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.